This is the method for assessing your current financial asset balance as well as looking at your current spend rates. For resource management, we're going to start with money because it's very black and white, easy to assess where we are and what we're spending because we have plenty of data on it, and the math is overall pretty simple. Before you can know where you're going, you have to know where you are today. So let's start with assessing our current financial assets. As you've noticed from previous videos, I like to use Excel for tasks like this. So I'll be using this for all the examples, and in my personal finances file, I have a tab for assets that looks something like this. The first step is to list all the assets you currently have. Now, before you start writing them all down, we want to identify several categories that I found it to be very useful to use, especially in terms of things like tax impact and retirement planning. The first category is pre-tax or tax deferred. Now, these are generally retirement accounts, and you may have a 401k, which is the most popular. That's something that you would have if it's through an employer. If the employer is a not-for-profit, like one of my previous ones, then you may have a 403b, which is a very similar type of account. You could have personal IRAs, you may have Roth IRAs, which just stands for individual retirement accounts. Basically, any of these accounts where you have not yet paid taxes on the bulk of the money sitting there. The second category is post-tax, and this is any kind of monies where you've already paid the taxes on the bulk of it, and they're sitting there at a known financial value. So the first of these would be bank accounts. You can have checking account, savings account. Certificate of deposit is another kind of account within a banking situation that is not as available. So we want to think liquid. In other words, if I need money tomorrow, these are things that are generally pretty accessible. A certificate of deposit could have several months or years even of maturity period where you may not be able to access them. However, it still falls into kind of the banking, and we have already paid taxes on it. It's a known value, so I'm going to include that in here as well. And then you'd have anything like stocks, mutual funds, any of these other kind of investments. Again, anything that you've already paid taxes on the bulk of the money. The third category includes the less liquid items. So in this area, we want to think about things like, say, a house. If I need money tomorrow, I'm not going to be able to sell this house and have cash in hand to go pay whatever bill that is. But it still definitely has value. So we want to think about what value is there in this house that I could access at some point in the future if I needed to. This varies a little bit because it doesn't have a set dollar amount like the items in the other two categories. So you don't want to think about, well, the value of this house is $340,000. You want to think about, if I sold the house today for $340,000, whatever, I'd have to pay off my mortgage because I owe money on it. And the only amount of money I have left after doing all that, that's the value that it would mean to me. So obviously that'll increase over time as the home appreciates and as I pay down that loan. But that's the kind of number you want to think about. What is today's value in this house? Now in this category, I also have vehicles. And vehicles are, unfortunately, generally a depreciating asset. If I bought a car for $30,000 a year ago, it is definitely not worth $30,000 today, even if I paid cash for it up front. So again, you want to think about, what is it worth today? If I had to go out and sell it tomorrow, what could I get for it? So you want to use tools like Kelley Blue Book or whatever it may be. Be realistic too. Just because it was your dad's old sports car doesn't mean that you'd sell it for X amount. But you have to think about not what it's worth to you. This isn't about sentimental value. It's about what is it worth on the market today. However, you may have a classic Ferrari that is just going up in value every year. And if you do, good for you. But most of us don't have that situation. I also have things like a motorcycle that I've spent a fortune on modifications for. But if I had to sell it tomorrow, I'm probably going to get about Kelley Blue Book back for it. I'm sure not going to recoup all the money I've spent making it faster. There's really nothing else that I have that I feel is worth tracking to this level of detail in this assets spreadsheet. Some people may have things like massive gun collections, massive guitar collections, a lot of jewelry, precious metals, whatever it may be, that may actually warrant putting it on here as a line item. But for me personally, that's where I draw my line. Now you know where your financials are today. If you want to know the financials in the future, you have to know how much it's changing to get there. So the first way we're going to work towards this number is to figure out what our delta in dollars has been so far. In other words, how much are we spending? How much is our financial asset list changing right now? Personally, I use a monthly cycle for this exercise because a lot of bills come on a monthly cycle. In other words, if you only track for a week at a time, you're gonna have 1 week where your mortgage is due and 3 weeks where it's not. So everything, for the most part, repeats on a monthly schedule. That's practical, that's what I use. Before we start the data mining, let's think a little bit about the categories that are gonna go into this. Now, this will be our first exercise in organization. So we're gonna just gently go into it with this particular exercise, but it's something that you're gonna see more of as we go through this in the next module. Take a second to think about a handful of categories that you could apply to all the money coming in and out of your hands in a month's period. And you can pause here if you want to jot down a list before I start talking through mine. And there's no right or wrong answers. This isn't permanent. This is just an exercise to get us starting to think about how we would categorize these things in our life. These are the categories that I use for my personal example. Now, the first thing I think about is the money coming in every month. And I've only had two sources in the past how many years? It's been the company I worked for as well as my own White Customs. I do not include things like growth or appreciation on investments, the house, or anything like that. Those are addressed in a different manner, and I'll explain that later. Once you get the income items out of the way, then it's this massive list of bills. You have the normal monthly bills like insurance, housing, utilities, phone, gym, whatever that you pay on a monthly basis. Then you have the other items that aren't a set monthly bill, but they occur a little bit more erratically throughout the month, such as groceries, which for me, I restrict that to just the food that I eat at home. I have entertainment, which for me includes the food I eat when I go out, not eating at home, as well as concerts, movies, whatever it is. There's going to be things like Barron's food and vet bills, fuel costs. For me, there are also these costs like marketing or admin, like software licenses, and those are going to be kind of a mix of the monthly cycles, like the software, with sporadic, like 1 month I may decide to do a big marketing campaign. Then there are the things you don't necessarily have on a monthly hit, but they could happen throughout the year, such as projects, right? Maybe I decide to put some more go-fast parts on one of the vehicles. Or travel. I'm not going to be taking vacation every month, but when I do, it is a big hit during that month. You may even have investments, such as for a while I was doing laddering CDs, which meant every month I peeled off a set amount of money and sent it to the bank for a CD. So you can include that in here as well. With the categories laid out, now let's get the data. Now, fortunately, almost everything that we do with money these days is electronic. We no longer have to sit and keep a pile of receipts to do our accounting. We don't have to spend a month making notes. We just go to our statements and we pull the information. One of the biggest challenges is to get that information off whatever statement you have into a usable form that you can dump into Excel. So for your bank accounts and your credit card statements, wherever you have money that is being subject to cost coming out of it, those are the kind of things you want to capture. Look at all your pluses and minuses in it, what it's going to. Another challenge can be looking at it, trying to remember what that is. Some of these items are pretty obscure and it's a little bit tough to figure out exactly what that cost was. And I understand, so be as accurate as you can. But basically what you're trying to do is take these different bank accounts, credit card statements, and if you spend a lot in cash or you make a lot in cash, make sure to keep record of that off to the side, or put some good estimates to that as well. Put all that data together and put it into a sheet and then format it in a way that lets you see, here's the items, here's the categories, and here's the amounts over that course of exactly 1 month so that you're catching a full monthly cycle of your activities. In the next video, we'll be looking at our data, using mine as an example, looking for ways we can improve, and then taking those learnings to create an improved budget, which will be this guy, as we move forward in life and know that with this budgeting exercise, we can better estimate where we're going to be in the future. If you haven't done so, please click the link below to subscribe, click the little bell for notifications, check out the YCC merch store, see if there's anything you like, and let's use casual sense.